Hey, Kyler here. Our aim for this show is to leverage every opportunity that life throws at us. I hope you find value in today's show. What is up, guys? My name is Kyler Offenbacher, and this is my brother Cord Offenbacher with the Leverage Life Show again. And today we are going to be talking about the difference between term insurance and permanent insurance when it comes to life insurance specifically. So, again, our core mission is to leverage every opportunity that life throws at us.
So as we jump into today's episode, Kyler, I had a crazy, wild thought and story that I thought of the other day.
What's that?
So now hear me out. If you had a money printing machine in your home, one, where would you put it? And two, would you insure it?
Absolutely.
No, but where would you put it though?
Where I would put it? Depends on how big it is, I guess.
I guess money printing machine has to be pretty big. All right, but you would insure it though. I would hope so because this thing's printing money.
Yeah.
I think the question though, when it comes to life insurance, the funny intro there is just that, are you not the money printing machine for your family?
Mm-hmm. Yeah, that's a
We
good way to
are.
look at it.
We are the greatest assets to our family, our minds, our hands, our work. We insure our houses, we insure our cars, but do we insure ourselves? It's something we have to think about. We have to insure the money printing machines. And I see two ways, and I know you see them too, Kyler, two mistakes that people make when it comes to life insurance. They either, one, don't get any,
Mm-hmm.
and they wait, and it becomes too expensive the longer they wait,
Mm-hmm.
or they get the wrong kind.
Mm-hmm.
They don't get term when they need term, or they don't get permanent when they need permanent. And that's why we need to break it down today to eliminate any of that confusion so you can know with clarity, with certainty, and to structure your life the exact way you need it with the right type of life insurance that you need so you can leverage every opportunity life throws at you.
Absolutely. Yeah. And I feel like a lot of times you mentioned structuring it exactly the way it needs to be. We want to be very intentional about structuring things by design.
Mm.
And that is a key thing that we want to do, obviously, with our both of our lives and our families, but with everybody that is in our circle, we want to be able to have that influence to be able to do things by design specifically. And at a high level, life insurance does one thing: it transfers the risk. So when you die, your family gets the death benefit proceeds and life can continue to go on for your family. The big question to be asked, though, is how do you determine what kind of life insurance you need? Because if you look at life insurance as an umbrella topic, there are really two different distinct types of life insurance. You've got term life insurance and you also have permanent life insurance. Hence why we have it on the screen here. And it's something that is really nuanced depending on the situation of everybody. Everyone's life situation is different, right? Because you've got people in their 20s and 30s, they've got families they're starting, they're starting in their careers. And so their unique needs are going to be very different than someone later more established in maybe their 40s or
Sure.
50s or even longer.
More risk involved. There.
Exactly. There's more risk involved. And I think the big thing, and it's a great analogy that this is thrown around in the insurance space, is when it comes to term versus permanent insurance, it's similar to renting versus buying a home.
I like that.
It's very similar to that. Term insurance is for a specific amount of time, and you can get that for anywhere from 10, 20, 30 years. It kind of depends on the insurance carrier, what they have with the products, but it's for a specific amount of time. And that's similar to renting. You don't own your home, you are renting it, and it's for a specific amount of time with the lease agreement. That's very similar to term versus permanent insurance. That's like if you buy a home. You own it. There's more flexing involved on how you can structure maybe the loan itself. You can add things to it in a lot of ways to make improvements. There's just more flexibility involved when it comes to permanent, but you also own it. And there's also a thing called a cash value, which we'll get into a little bit today, but not very much. But with the cash value component for a permanent policy, if you think of it in a home mortgage situation, it's actually similar to like you're building equity in your home.
I see. It'll
specifically.
grow the longer you
grow.
own the policy. I
Exactly,
see.
exactly. So those are some really key differences between the term and permanent at a high level when it comes to an analogy. And when it comes to term too, everyone's situation is different, but there's a few things that we like to look at and makes a difference on how you structure the policy with term specifically, but you can look at things. You can have policies that are convertible or
Mm,
renewable. So there's lots of different nuances between these, but those are two things specifically that we found that are going to be very important to have when you have term insurance, because if it's convertible, that really just means that sometime within the span of that 10, 20, 30 years, you can actually convert that to a permanent policy if you want to,
right.
where then you would have the permanent policy the rest of your
Mhm.
life versus term. It's just a specific amount of time.
And I think one thing I hear you saying there is it can be so nuanced and depending on the specific type of situation,
Hmm.
depending on every type of person's needs and problems that they're having. So that's why it's also important, even though we're talking high level today,
Yeah.
we encourage you to talk to a life insurance specialist because that's how you can get all your needs on the table, all the financials on the table, and actually assess what type of problems do I have and
Hmm.
where does life insurance actually fill the gaps and solve it.
Exactly.
One thing I'll add on the term life insurance and permanent life insurance difference too is obviously the cost.
Hmm.
That's one of the biggest questions that comes up in pretty much any conversation is,
Hmm.
all right, how much is this going to cost me?
Exactly.
um, term life insurance, it can be stupid cheap, especially if you're young and
Hmm.
healthy because of the way you just described it, because of its design. It's meant to fill the gaps. And of course, the longer you wait to get it, the harder it might be to get the
Hmm.
type of coverage you need and the more expensive it can get. Of
Hmm.
course, when you're 25, young, healthy, you work out all the time, you don't have any major health issues, we don't know what's going to happen when you're 45. Coverage for term will be cheaper when you're 25. Coverage in anything will be cheaper when you're
Exactly.
25.
Yeah. Yeah.
But that's an important note. It is just significantly cheaper, which is why, I mean, my wife and I personally,
Hmm.
I'm working full time. My wife is primarily staying home. I'm taking on a lot of the financial risk right now for our family. Primary breadwinner. I know a lot of dads maybe feel that too if they're
Hmm.
working full time and maybe their wife is staying home. We decided we needed very early on to get a term life insurance policy because I know that there is an income gap for the next 25, 30 years.
Hmm.
I'm not in my primary money making years. I hopefully am going to make more money when I'm 45 or
Yeah.
50 than when I'm, you know, entering my early 30s. I
Exactly.
hope I'm making more money one day. So I got to fill that gap. I needed a term life insurance policy and I needed it to last as long as the coverage was actually necessary.
Hmm.
And of course, I can get creative one day. I can either renew that, maybe
Hmm.
the premium will go up, or I can convert it into a different policy. That's our situation. I know
Yeah.
you and your wife both work full time.
Yeah.
Give us a little bit of your insight because I know you both have a term coverage. Is
Mhm.
that right?
Yes, that's correct. So my wife and I, we both work full time, and we share the financial risk, if you look at it that way, within our home. And if something were to happen to me,
Hmm.
that would obviously be a big blow financially for her and our two kids. But it's the same thing on her side. So if something happened to my wife, then that would be hard on
Hmm.
us because we do share it very almost like 50-50 in a lot of ways from our financial risk. And so for us, we structured our policies in a way that for a specific term, of course, because we have term insurance, but we had to look at and see, okay, how much do we make, obviously individually, but
Hmm.
then on top of that, how much do we have on our mortgage? How much do we have on our rental property and some of the other
Right.
debts that we may have in place just within our life? And this is why it gets so specific with each person's scenario because everyone's just so different. And
That's
so we
right.
had to structure this policy in a way to
Hmm.
make sure that the amount that my
Hmm.
wife would get or I would get, it would be able to pay off the mortgage. It would
Hmm.
allow us to pay off the rental home. It would allow us to live and get, I would say, through the grieving season
Hmm.
in a lot of ways where we don't have people coming at the door knocking and saying, "Hey, your mortgage is due," and
Right.
we're missing half of
Right.
the income. And so it
Gives you
allow
some breathing room
exactly it gives
there.
us breathing room to allow families to get through a season of life with just a burden taken off of their back
Mhm.
from a financial
Yeah, that's
perspective.
great. That's super helpful.
Mhm.
Well, we've talked about, term and you shared some different nuances with term insurance and how it can be customized to you specifically or to us specifically. What about permanent life insurance? Can you give us some examples or maybe some problems that permanent life insurance might solve that's
Absolutely.
different than term?
Absolutely. Like I said, term is for a specific amount of time. When you look at permanent insurance,
Mhm.
it's exactly what that is. It's permanent. It's for your
It's true.
entire life. And as long as you're paying the premiums, which the premiums is just basically how much you pay a month
Mhm.
on to have the policy in place. As long as you're paying the premiums, the policy will stay in force. And even within permanent insurance, there's the two categories I mentioned, term and permanent, but you can get into a lot of other types
Mhm.
of permanent insurance when it comes to whole life or universal. There's index universal life, et cetera, et cetera. There's more involved situations that you can get into depending on like what your situation looks like,
Right.
of course. But at like a high level, it's going to be for your entire life. But
Mhm.
then these policies, they also will develop something called a cash value. We're not going to get too far in the weeds of what cash value is specifically, but it's a creative way to be able to leverage that
Mhm.
in depending on the person's situation, of course. But you can use the cash value in different avenues as well. But it's really a lot more expensive, like you mentioned earlier. So
Mhm.
premiums are a lot higher with permanent insurance, and the reason for that is permanent policies have a level premium schedule. So what that
Right.
means is when you get it, you can literally look at a financial table and you can know exactly how much you're paying throughout the course of the entire policy. So by the time if you get it at 40 years old or so let's say 35, you get at
Mhm.
35, you can literally look on that and say, okay, I'm going to be paying this much at 50. And it's going to be the same amount. And so like, there's still some nuances within
Right.
how you can like structure these policies as well, but it gives you in a lot of ways, a way to budget and how
Mm.
you plan for this permanent policy to make sure you actually have the funds. But I was mentioning earlier that it is higher, of course, because the older you get, the more likelihood that you're going to have some sort of health or the possibility of like dying because you're just getting older, of course. And so
Right.
the higher, the more money you're putting into the policy allows the premium to stay more level.
Right.
That's the idea
Right.
behind it.
I think there's a confusion there too on like higher premium. Maybe some person might hear that and think, oh, if I'm paying more, do I get more value out of that? Is it a
Hmm.
better product in general? Or talk to the difference between
Sure.
that in terms of, oh, if somebody hears that, like higher premium, higher value, or better product. Is that true? Or is it
It's
more
not
of like a problem thing?
it's more of like how you're just viewing your situation. And it's not that it's necessarily better in
Mm,
a lot of ways. It's just, it depends on the life situation, the circumstance. And so people that are younger, a lot of times don't have the money to pay for permanent insurance because it is more
that's
expensive.
right.
And so they'll do term. If you are going to look into more of a permanent policy, that's going to be for more people that are somewhat more long-term thinking. They love just having peace of mind that they have
Hmm.
something for their entire life. And at the end of whenever they pass, their family is going to get X amount.
Hmm.
And it's also, this is getting into a little bit more specifics of the intentionality behind the design of permanent policies. You
Hmm.
can use things for estate planning or legacy, wealth transfer. You can use it for liquidity planning. There's different reasons that you would do permanent policies
Right.
compared to a term policy specifically.
Right.
And so it really just depends on the situation. But a lot of times, I mean, from just a general amount of money you're paying for the life
Hmm.
insurance, it kind of depends on your budget, of course, but
Hmm.
it's going to depend on life
Yeah.
circumstances for
I
sure, too.
also hear it might depend on the problem you need solved too, like the
Yes.
specific outcome you need in your life. Like the legacy wealth transfer. That
Hmm.
makes sense. That's clearly something that cannot be solved by a term life insurance policy. So I like that phrasing of okay, they're not better. They might just solve different problems or different situations, which make everyone's situation customizable and
Hmm.
unique. And the need for a life insurance specialist to really we put it all on the cards and discover what's actually best. And the right person can help you walk through that
Hmm.
and get you what you actually need.
Exactly.
So, well, let me say it this way: it's like a basic framework that we talk about a lot. That we share with others when thinking about this. It's a term life insurance. It's going to protect the highest liability years
Hmm.
when there will be an income gap.
Yes.
So we don't know how the bills are going to be paid if something happens to me or to you or to a spouse. You got to mitigate that. You have to mitigate that risk. That's where a
Hmm.
term life insurance policy comes in. And then you also have a permanent life insurance policy, the other side of that framework. What it's going to do is for the long term thinker, it's going to cover those risks that you might think of 40, 50, 60, 70 years from now that you need for your whole life, like those legacy wealth transfers, or
Mhm.
maybe, you're a real estate professional. I don't want to get too down to the weeds
Yeah.
of too many examples, but say you're a real estate professional and you keep kicking down, a 1031 exchange or these tax deferred properties, and you just keep kicking that down. One day that's going to come to a front and you got to pay for it. So a lot of people use life insurance for that, or different avenues of where you can get really
Mhm.
flexible and really creative
Yeah.
depending on your specific
For
situation.
sure, for
So,
sure. Yeah, and Court, I know we've got a couple examples
mhm.
of basically, how can a couple do this the right way? What would look good for them, and versus somebody that may not do it the right way, and it could cause some long-term consequences down the road. So why don't you go through these examples for us, and let's talk through some of that.
So real examples, but we're of course going to omit their names and put in fake names here. But the first example we'll give you is just a couple, Jake and Amy. They are both working full time. They Jake just started a new business, hasn't quite taken off yet, but he knows that there's a risk there, still paying himself. So they both need term life insurance. They have two
Mhm.
kids and they own their home. They have a mortgage. So if something happens to either of them, they're going to have a problem.
Mm,
There's going to be an income gap and there's not going to be any breathing room. They're going to
mhm.
wonder how do we pay the bills? So what do they need?
Term.
They need a term life
They need a
insurance
term
policy.
policy, yes.
So what they did is they both took out a 30-year term policy because
Mhm.
they're both 30 years old, and they're thinking, I want to make sure we are set till the age of 60 years old before some of those other accounts would really come to help out as well, or before I need a more um, unique policy to
Mm,
our situation, like a permanent life insurance policy.
yeah.
They needed something to fill the gap. And best case, they're not going to need it. That's term life insurance functioning exactly the way it's supposed to.
Mhm.
But let's go to a different scenario. You have Chris and Amy. I think it's Jake and Amy. We'll go Chris and Amy too. Um, Chris just started his own business as well. He is sharing a huge risk there. They also have two kids
Mhm.
and they also own their home. Chris said, you know what? I see life insurance as a need, but I've got time.
Yeah.
I'm 29 years old. I don't have to think about that for 5, 10, 15 years because it's really not going to make or break my lifestyle. Um, Fast forward 5 years, Chris gets hit with a health diagnosis.
Mhm.
And what's going to happen to his premiums with a health
It's
diagnosis?
gonna skyrocket.
It will skyrocket. It doesn't necessarily mean he's uninsurable completely, but I mean, it could really drive up the premium quite a lot.
Mhm.
I mean, depending on the situation, the underwriters are going to have to do all the work that they do to make sure they can get you covered, but the premiums are going to be significantly more expensive than if he had bought it when he first thought about buying life
Right.
insurance. And the idea here behind these two different scenarios is that it's not like life insurance just gets expensive all the time.
Mhm.
No, it gets expensive when you wait to buy it.
That's
So you
exactly right.
need to buy it when you're young and when you're healthy.
Mhm. That's exactly right. And when you look at the 2 different scenarios, you really see this all the time in a lot of ways.
Mhm.
You've got people that are planner. I think that a lot of this is sometimes just people's personality too.
Sure.
Some people are planners and they
Mhm.
wanna have things in place. They're thinking 10, 20 years down the road, and they're wanting to be able to make sure their family's protected. And then sometimes there's people that, and not to anybody's fault, that's life, their circumstances, it wraps them up and they've got a lot of stuff going on and they end up just kicking this stuff down the road.
Right.
So that's sometimes what does happen. Not
Mm.
saying that's the best thing, obviously, but there's also another key. A lot of people too that I've actually seen that they just hope and pray that their situation is going to be better in the future. And I know that that almost sounds crazy, but
Right,
they
right.
kick it down the road and it's like, well, I'm just going to hope and pray things are better in the future. And then they get to that point where you're mentioning, and then something happens. And
Mhm.
now their premiums are skyrocketed. And depending on the situation, it just is going to be a lot more expensive to get the
It's
coverage
very
that they
true.
could have gotten if they would have planned for this
Mhm.
earlier in their years. And of course, with everything that we're doing with the Leverage Life Show, we always want to have an actual step.
That's right.
And we always want to be able to give you something to think about and to make sure that we're just kind of getting the gears grinding a little bit to make sure that
Mhm.
we're really thinking critically about, not only our situations, but what do we want to do with our life in general to make sure we're designing it by, very intentionally, of
Mhm.
course. And the thing that we were just talking about on, how do we want to talk about how to close this for today, and a measurable action step is just a question. It's like, if you were to die today, how many years would you need income wise to make sure your family felt protected or to get through that
Mhm.
grieving process?
And it might be a couple of years.
It might be a couple years. Everyone's just so different. Like I said, everyone's situation is different. People have kids,
Mhm.
people have mortgages. So we've got to be able to think strategically about these types of things. And so that's what I would say. If you die tomorrow, how many years of income would you need to be replaced to get you through to the next season of
Mhm.
life? That's a key question that I want to ask. And so if the answer to that, income replacement would be, or to fill that gap, however many years that would be, then a lot of times a term policy is going to be cheap.
Mhm.
You can get that at better rates because if you're younger and you need to replace that income, that's going to be your
Mhm.
go-to for this.
That's
If
right.
it needs to be more of like a long-term thinking wealth transfer type of legacy planning situation, or if you just want peace of mind for the long run to have something in place for the rest of your life where you get it and forget it kind of thing, as long as you're paying for it, then
Right.
maybe a permanent policy is going to be more for you specifically. And you almost have to, it's hard to put yourself in the situation of losing a loved one,
Mhm.
but from the perspective of the agents and working with clients, a lot of times if you get a check from an insurance company that is for 100,000, $500,000,
Mhm.
you have to think in the minds of the clients as well that life still has to go on. The
Mhm.
mortgage still has to be paid, the income still has to come in, there's debts to be paid. So if a family gets a check for 100,000, $500,000,
Life changing at that
that
point.
completely changes the rest of their life.
Mhm.
Not that it's going to make it easier on the grieving process because they lost somebody or their loved one,
Mhm.
but it makes the financial burden less.
Yeah.
And that's the key importance for having life insurance in general, is just to make sure that you are protecting your family
Mhm.
for
Yeah.
the unthinkable if it was to happen.
No, it's so well said. It really is that lens of caring for
Mhm.
your loved ones. We do that on a daily basis. We clothe our kids, we put food on the table. It's all in the lens of care.
Absolutely.
Life insurance is another realm of care. It's a need. We all have to have it. We all need it. And it's driven by that desire of love, care for those around us.
Absolutely.
Kyle, anything else that you would add on term or permanent life
No, I think
insurance?
that's a good overview for today. We can get into some more specifics of these in future
Hmm.
episodes, and I think we definitely should because a lot of people will have these questions of like, what's
Yep.
the next step? How do we design this stuff?
Hmm.
From my situation specifically. So if you do have those questions, then feel free to reach out to us, leave some comments, and we can talk through those specific
Yeah.
situations as well.
Yeah. And make sure you talk to the right person that can help you structure the type of life insurance you need so that you can leverage every opportunity that life throws at us. Thank you all for joining today, and we'll see you next time on the Leverage Life Show.
Absolutely. Bye for now.